Did you ever buy the dip and then it just keeps dipping? Hey guys, this is Hamza with Trading Secrets. I've been trading for the last 2 decades. Stocks, crypto, real estate, merchandise, you name it, I've done it. Right here on this channel, I'm going to be sharing my journey with you all so you guys don't have to learn the hard way. Hey guys, I'm a new channel. I love for you guys to subscribe to the channel if you find any value. And without any further ado, let's get to the point. Guys, we've all been there. The charts are looking amazing. Everybody's saying this is the bottom, and you just go all in. And the next thing, you're down. The market is just dipping. Guys, it's very important to see not every dip is a discount to buy, or not every dip is the bottom. You got to check the fundamentals. Only buy dips in companies that you believe in, that you know have very strong outlook and very strong long-term potential, right? You got to zoom out before you panic. Sometimes a huge dip on the daily might be just like a small hiccup on the 6 months or the year, you know. So always zoom out, you know. When in doubt, zoom out, guys. But you gotta look at it, right? When I already talked about this before. When your dollar cost averaging down, right? You just don't start averaging down on the first dip. You gotta look at. So there's 2 things. First, you don't want to. So for example, you buy a stock at $10, it goes down to $9. You don't want to buy the dip, right? You don't want to average down. You want to wait, and then once it starts to dip, look at the support level. Look where the stock has the next support level. For example, a stock was at $5, right? And it was trying to break $6. It goes to $6, gets rejected. Then it goes to $6. So it's basically testing the resistance and it's coming back down. It's getting rejected at their resistance. Once it breaks the resistance, right, and it crosses the $6 mark, now the $6 is the new base. It's the new resistance for that stock, right? So if the stock is falling down, you got to look at the next support. So you want to buy. So you want to get a confirmation. You want to make sure that, hey, the stock is coming down to, for example, the $6 level. Now it's a resistance. It comes down. Make sure that it's bouncing from the $6 level and it's holding the $6 level on a daily, on a 4-hour, 2-hour, you know, whichever you're more comfortable reading. Make sure, get the confirmation before you average down, because guess what? If it breaks the $6, it's headed down further, guys. So use the charts to your advantage, right? I know there can be catalysts where the charts are not going to matter, because obviously if there's a strong catalyst, right, and a company has really good news, the charts are not going to matter that much at that point, but eventually they're going to catch up to the stock. So it's very important that you don't just start averaging down and get all excited and get impatient, guys. Remember, I told you about this. Patience. Trading is 99% patience, 1% skill. You got to make sure, in the DCA video that I made, I told you guys, if you're buying a stock and you buy a stock, comes down, wait for at least wait till you're down 40% or 50%, right? Because what's going to happen is, for example, the stock is at $10, it comes down to $8 or $9, you're averaging down, you're going to run out of cash. But if you wait for it to come down maybe to like $5 or $6, you can double down at that point. And now your average is going to be way lower. You have a better position. Once it's going to start moving back up, you're going to be in the green before you know it. And then you have a better position established. You have more shares to play with when it goes up. You know, you can probably sell some and then, you know, just recover some of your costs or most of your costs and still have a lot of skin in the game, right? For example, you have 1,000 stocks at $10 and now it goes down to $5. You buy another 1,000 for $5, or now you put another 10,000. Now you have 2,000. So you have 2,000 shares at $5. You have 1,000 shares at $10. Your average cost is going to be around under $7. Once it runs up to like $10 or $12, you can just take out your investment, the 20,000. You can just take it. You just take it out, and then you still have a lot running on the table. You know, you just have a lot still that are just, you know, you just let them run for the long term, right? But make sure you still have a stop loss at your cost, so you don't want to lose your profits. But I'm just saying this is a good strategy, but this can only work if you know how to dollar cost average in the correct way, how to buy the dip correctly, how to read the charts to your advantage, guys. I don't want you guys going out there and buying every dip and just getting excited. If you think like you're getting too emotional, just don't look at your portfolio, guys. Just leave it alone. That's fine. Just log out of your app. Just delete the app for a few days. It's fine. No problem. The world's not going to fall down. Nothing's going to happen. I promise you. Don't risk more than you can handle, because if you don't know how much you're willing to risk, there's no cap. You can lose a lot. Maybe you can lose everything, right? Because when you're emotional, you're not thinking rationally. You're just making these decisions. You're gonna end up hurting, guys. I know people who went all in on crypto and they're hurting. They just went all in. I know people who went all in on a stupid meme stock. Guess what? They're hurting, right? You don't want to do that. You got to understand the reason behind the drop. If the company, for example, the company started diluting like crazy and it's going down, you got to see if a company, if a stock is at $20 and they start selling shares at $10 or $12, it's probably going to come down to that position, that point, right? It's probably going to come down to the $10 or $12 mark where they diluted the share. So you got to see, how much cash the company's holding, how many chances there are of dilution. If they're diluting, guys, you got to cut it, right? You got to cut it. You got to wait for it to stabilize instead of just letting your portfolio bleed. You can't do it, right? So understand the reason behind the drop. If there's a quality stock, it's just dropping because of whatever broader market reasons. Yeah, it's a good dip, right? You can do that, but you gotta stick to your strategy, guys. You cannot just be like impulse buying. You cannot be like without planning the entry, exit, risk levels. You just go in and then you just messed up, guys. So I don't want you guys making that mistake, right? So what I want you guys to do is be very strategic when you're buying the dip. That way you're not left holding the bag. Hey guys, if you find any value in the video, make sure to like the video, subscribe to the channel, and I will see you all next time, guys. Have a wonderful day.